Timothy Sykes is an American entrepreneur, investor, and widely popular penny stock trader. He began in 2003 with Cilantro Fund, a hedge fund he founded using the capital he had gained from trading. Timothy Sykes graduated from Tulane University in 2003 with bachelor's degree in philosophy and a minor in business. He is Jewish. While at Tulane, Sykes routinely cut classes to day trade. In 2003, he founded Cilantro Fund Management, a small short bias hedge fund using $1 million, mostly from his friends and family. After initially acquiring profits, the fund shut down 3 years later due to heavy losses. In 2006, Sykes was included on Trader Monthly's 30 Under 30 list of up-and-coming traders in the market, a selection which editor Randall Lane later called our worst pick among the chosen honorees. Sykes claimed that Cilantro Fund was the #1 long-short microstock hedge fund in the country, according to Barclays. Lane later discovered that the rating came from the Barclay Group, a small research company based in Fairfield, Iowa, and not the well-known Barclays British Bank. At the time, there was no pattern day trading rule, which meant he didn't need a minimum of $25,000 to day trade. With little strategy, he started buying random companies, mostly larger names that he didn't budge very much. He recalled losing at least 50% of his bets in those early days. He eventually discovered that most of the big gainers were small internet companies. The first time he spotted a repeating pattern was after noticing that brands that added .com to their names would see their stocks rally. He recalled testing the assumption and making money on several companies, including a camping gear retailer called the Sportsman Guide. But if you've ever thought of starting a blog or writing on Now, it's hard not to find his story inspiring. Sykes didn't intend to become a blogger. He started his blog to promote his book, An American Hedge Fund, published in 2007. When a publisher offered him a $35,000 advance, he balked. He'd already turned $12,415 of his bar mitzvah gifts into $1.65 million through trading, and he started his own hedge fund. He also noticed repeated gaps up when a stock opens above its previous day closing price, mainly between Friday's close and Monday's opening. During his college freshman year, he tried his weekend theory on a company called Illinois Superconductor Corporation after it announced positive news about the product. After that, he founded several ventures, including Profit.ly, a website dedicated to helping traders learn and improve, and the Tim Sykes Millionaire Challenge, an annual trading competition. In 2008, he published the book An American Hedge Fund: How I Made $2 Million as a Stock Operator and Created a Hedge Fund. It documents his experiences, strategies, and challenges when starting his hedge fund. Investimonial.com, a site dedicated to collecting online reviews of financial products, books, and services, was one of his most successful investments. Sykes created Miss Penny Stock, a financial beauty pageant, in 2012. It was designed to educate the public and remove the stigma of trading penny stocks. Imagine creating a blog where you generate millions in revenue each year by writing about your greatest passion. Timothy Sykes doesn't have to imagine. That's what he does at his blog, Timothy Sykes, where he teaches his followers about penny stock trading with the promise that they too can become millionaires. He expects the site to bring $15 million to $20 million. His company runs a community for traders called Profit.ly and sells a product including DVDs and trade alerts to help others use his methods. Not everyone wants to be a trader like Sykes or aspires to the brash style of capitalism he demonstrated on the reality TV show Wall Street Warriors, which aired from 2006 to 2008. Most of the people who turn it on hate me, says Sykes. I am a little too confident and I'm not embarrassed about it. In February 2017, Sykes donated $1 million to pencils of a promise to help build 20 new primary schools across Ghana, Guatemala, and Laos, which are to be completed between 2017 and 2018. The Timothy Sykes Foundation was eventually renamed the Karmagawa Foundation, and by 2019, Karmagawa was built 57 schools and donated more than $4 million to 45 charities for environmental causes. Sykes has publicly criticized various businesses and celebrities, including Shaquille O'Neal, Justin Bieber, for promoting pump and dump schemes in which an investor purchases stock, hypes others into buying that stock to inflate its price, then sells the shares at a higher price. The investor subsequently shorts the stock to profit from the resulting decline. In May 2017, Sykes and Bow Wow had an Instagram feud in which at least one user accused Sykes of using coded racist language. In 2020, Sykes and Karmagawa made a joint pledge to donate $1 million for relief efforts in Yemen during the Yemeni civil war and the cholera and COVID-19 epidemic. Karmagawa built its 100th school in Myanmar in 2022. Sykes has a net worth of approximately $15 million of 2022, primarily earned through his investments and trading activities. His assets include stocks, funds, property, and more. Other assets include his online businesses and course materials, such as educational content, books, and trading courses. During his trading career, Sykes has been continuously refining his trading style. He trades mostly penny stocks and has a strict set of trading criteria. Sykes has written several books in which he explained his strategies. He also hosts seminars and conducts webinars for aspiring traders, sharing his knowledge and experience. Today, Sykes' income comes from his online program, Millionaire Challenge, in which he teaches others how to become traders. While he still trades, he donates his gains to charity, and he uses his trades as live lessons to demonstrate his framework. But not everyone becomes a millionaire from trading. Sykes says most traders lose for various reasons, including lack of preparation, trading without sticking to rules, overtrading, leverage, and large position sizing. He's also not sure what percentage of his students become successful. He compares his program to a gym membership, where the majority of those who sign up don't succeed or follow through.